we went ahead and asked our customers what were some questions that they had before engaging a mortgage broker, and hopefully answer the questions before you guys ask them, especially if they're similar questions to what you have. The number one question was, what documents do I need to provide for a home loan application? That depends on your particular set of circumstances. Now, there is a bunch of generic documents that mortgage brokers will ask for. Obviously, there's a few disclosure documents, privacy, credit guide, things like that they'll provide to you up front. But as far as your own sort of personal documents, some of the most common ones are ID documents, income documents, so that might be pay slips or tax returns, documents relating to liabilities you have, so maybe car loan statements or credit card statements, or home loan statements, of course, maybe some documentation, some tax documentation for various different reasons. And yeah, that's pretty much covers a broad range of the documentation that will be requested when you are doing a home loan application. Now, it's really important that these lenders and brokers operate under a responsible lending guidelines, which means that we have to make inquiries or reasonable inquiries into someone's personal financial circumstances to see whether a loan application is suitable for them. And so even though there is a range of generic documents we might ask for, the other reason too is we're trying to predict what the credit assessor is actually going to ask once the application's been submitted. It can be quite frustrating when you sort of provide a document, it gets submitted, then the credit assessor asks for a document, so we request that, and that's given us different information than it did previously, and it can sort of complicate and draw out this home loan application process. So what generally mortgage brokers will do is when they do an assessment, have those questions, they're going to try and predict what the questions the credit assessor will ask, and get the recommended documentation for that up front. If you have any questions about your particular set of circumstances, what documents will be required, please let me know, and I'll be happy to answer any further questions about that. The other question was, do mortgage brokers charge a fee? Now, this really depends. The traditional model for mortgage broking is that they will charge the bank, or the bank will pay them a commission for introducing new business to them. And so therefore, if that's the case, we don't have to charge the consumer any additional fees. Where that leaves you when you are engaging mortgage brokers is to ask up front, but also be aware of a disclosure document that is required for consumer lending, and that is a credit quote. And so it's really important. A mortgage broker will provide that credit quote up front, and it's really important that you do read that credit quote and understand the terms of any payments that needs to be made to the broker. When you get that credit quote, that is up front before you sort of getting through that whole assessment process. So just make sure you are aware of what the disclosure obligations are. And if you have any questions about charging fees or whether brokers charge a fee or not, feel free to ask. We will, on a majority of our loan applications, do not charge fees. However, there are certain set of circumstances in which we will, but again, we let you know ahead of time if that's the case, so it gives you time to decide whether you still want to proceed or not. The third question that I got was, how do I show income if I am self-employed? This actually came up the most. Now, we do have a lot of customers who are self-employed. That's one of the things that we focus on, I guess, as far as our customer base goes. And so that, again, really depends. And the reason why there's a different sort of set of rules for someone who's self-employed to someone who's maybe full-time or permanent part-time job is the guaranteed income. With self-employed, you've got that fluctuating income, rather, where it really depends on whether it's seasonal or how many clients you had that month, how many people you've invoiced that month. And so lenders generally like to look at it sort of broadly, and that's usually seen as the last 2 years of tax returns. And they'll look at the last 2 years worth of company tax returns or individual tax returns, depending on how your business is structured. There are alternative ways to assess business income if you don't have those documents available. And that is what they call alternative doc, low doc. There's a few different names for it, but it basically means we're using alternative documentation to your tax return. So that could be an accountant's letter. It could be business activity statements, bank statements for the last 6 months, 12 months, showing how much has gone in and out of the business. There's no right way or wrong way to go about a self-employed home loan application, but it is important to know what documents are going to be most suitable for you based on what you've got available and where your business is at, but also what that also means for interest rate, as you might find that certain types of loan applications may come with a bit of a premium depending on the risk level of the bank. The fourth question that I had was, when should I engage a broker? This is a very interesting question. And we have people engage us at a whole bunch of different times. I only sort of the end of last year, I had someone give me a call and say, hey, we purchased the property at an auction last weekend and we need finance ASAP. And it's the first time I'd ever spoken to these particular customers. They were referred from a friend of theirs. That's obviously meant that they're really engaging the broker at the 11th hour. We're able to get finance for them and everything was fine. And then of course people will engage us on the start of their journey. They don't have anything saved in their bank account. They just know that their goal in the future is to buy a property, and they want to speak to us so they know what type of plan they should put in place, whether it's a savings plan or whether it's where they've got an idea of how much income they're going to earn, or if they're self-employed, what that's going to look like over the next few years in preparation for buying a home. If you're thinking about in the future buying a property, it doesn't hurt to engage a mortgage broker. They're not there for the 11th hour assistance. They can do that, of course, but they're there to help people long term and help them achieve goals and understand what's required from a lending perspective, from a credit perspective, where their income needs to be, what deposit they need to have. And we do those consultations every day. So if you want to book a consultation, let us know. Can brokers also assist with finding a property? I'm going to do a blanket no. This is probably going to be the quickest answer so far. Look, brokers don't assist with finding a property. We don't do that, but also the broker license or the credit license, I should say, doesn't cover buyer's agency or finding a property for somebody. I have conversations with purchasing properties all the time with our clients and what that looks like and how we can help, and we discuss certain areas or something like this, but it's not something that we can give advice on, and we can only sort of help push you in the right direction. In saying that though, we do have, and most mortgage brokers will have connections to usually a buyer's agency or a buyer's agent that can then give you that advice and help you find that property. So speak to your mortgage broker or speak to us if you have any questions and you're needing help finding a property. It's not a write-off. You don't have to think that just because they're a mortgage broker they can't help you. We can connect you up to someone who is a professional and expert in that field and does have the licenses to do that. Does the broker assist after the loan? That's a very good question. And I can't speak for every single broker out there, but majority of the brokers that I know and that I associate with, including us, we do a lot of work after a loan's done. Now, we work with them after maybe a single transaction's gone through, the loan is settled and it's all done. The mortgage broker is actually still there to provide assistance and help. The same thing happens if you're on a fixed rate and the fixed rate expires. Really, you should be going back to your mortgage broker and saying, hey, fixed rate's expiring, or I got a letter from the bank saying it's expiring. What are my options? And that broker can walk you through those options. The other thing that we do is we also do pricing. At least annually, we do a pricing review where we go to the lender, see if they're offering any better rates. We sort of compare it to market, and we see if we can get a better rate for our customer without having to go through the whole application or refinance process. We see if we can get better rates. And so we're constantly engaged with our clients. We're constantly engaged with their pricing and their loans and their interest rates. Short answer is yes, brokers do assist after the loan. The other question that I have is, should I get an offset account? My knee-jerk reaction is 100% absolutely yes, you should get an offset account. However, I'm also very aware that an offset account is not suitable for everybody, and it's not suitable in every circumstance. Some things you need to know about an offset account is that often an offset account does come with a packaged home loan product, and with the packaged home loan product there's usually an annual fee, so you're sort of paying for the privilege of having an offset account in many circumstances. In some circumstances that's not the case, but in many circumstances you are. And so it's important to know that if you are paying for the offset account, at what point, at what sort of savings figure will that offset account actually be beneficial to you? Is it actually going to offset the fee that you're paying to actually hold it? Now, some people have a lot of funds available after a purchase, and in that case, yes, absolutely. Most people should be. My recommended advice, of course, is keep saving. And so even after you settle on a loan, yes, you should still put some funds away. And so an offset account, preemptively may be useful, because at some point you are going to have enough savings where you're going to reduce that interest. Some investment loans may not necessarily need an offset account, especially if you've already got an own occupied property and then you've got an investment property as well. And that's because a lot of customers prefer to offset their own occupied property rather than their investment property for tax reasons or for leveraging purposes. So not in every circumstance, but it is highly recommended to consider an offset account in every application. Another question that we have is, should I pay off HEX or help debt before applying for a loan? and does it affect my application? So hex debt's one of those, it's a difficult question, and I would say that it really depends on your circumstances. My initial reaction to that would be to say no, you definitely don't need to pay off your hex debt, absolutely not. Does it affect my application? It can, if you're above that threshold and your pay slips, or at tax time, the ATO is deducting, your mandatory or compulsory help repayments based on where your income is at, then that's going to reduce your borrowing capacity. Banks do consider HEX repayments. There is conversation about if HEX is close to finishing, whether banks are going to adjust the way that they review that. But as far as at the time of making this video, at least, that's not in effect. So what I would do first is I would see what your borrowing capacity is currently with the HEX, without it paid off. And then if that's satisfactory and that works for you guys, then great, it works and you don't need to pay it off. If it's affecting it in a negative way, and your borrowing capacity is affected by it, and you want more borrowing capacity, then what I would do is I'd ask your broker to do a sort of an indicative assessment, should it be paid off? So almost like a dummy application. Get them to have a look at it. If you paid it off, what would your borrowing capacity be at that point? And then they can work that. Now, if that's more satisfactory for you and your circumstances, and you have the capacity to pay off that HEX debt without it being a financial burden, then that's something you could consider. But no, generally, I wouldn't recommend to pay it off, as an initial idea or initial thought. What impact do buy now, pay later services have on my borrowing power? It's 2025 and there's been a massive rise in buy now, pay later services, Zip Money, Afterpay, even PayPal Pay in 4. What else is there? There's a bunch of them. But you'll see that buy now, pay later services considered debt. And the reason they are is a lot of people I know, they don't consider it as debt. They consider it as, it's interest free and they're just paying off the price of the product over a period of time. However, that might be the case over only 4 payments. But when you do an application with the bank, they do take a snapshot of your circumstance at the time. And even if there's 2 payments remaining on that 4-term payment plan, then they will look at that as, okay, well, you owe somebody money, you owe somebody or some company money, therefore it's a debt, and they'll assess it based on that. The other thing too is that a lot of these buy now, pay later services have sort of credit limits, and if that's the case, some lenders are treating that like credit cards. Again, it's not a matter of whether it has interest or not, it's just the way that the bank assesses debts. There are some exceptions to that. Not every lender will treat every buy now, pay later service as a debt or as a credit card. Some of them will assess it as just your general living expenses and part of your living expenses. And that's where it's important to speak to a broker to have a look at your circumstances, see how much it's actually impacting your overall circumstances and provide some recommendations based on that. But it's important to also know that you should declare that to the bank or broker before an application, because often those do crop up, and it's important to make sure that everyone's aware of any sort of payment plan that you're on. Well, look, thank you so much for listening to that. Look, that's the main questions that I am being asked, main questions that my customers had prior to engaging us. And so I just wanted to make that quick video. Hopefully I've answered some of the questions. Maybe I've left you more confused than when I started, and I apologize if that's the case. But if you have any questions, please reach out. The reason why some of the answers may have been vague is just simply because a lot of the information is based on your personal set of circumstances, and it's really hard for me to give you an umbrella blanket rule for everyone and anyone when answering those questions. But if you have any questions, reach out and I'll be more than happy to answer.